Hi there, welcome to Kneppy Invest, and welcome to the stock of the day. Typically, the stock of the day is chosen as a company that has released an interesting announcement on the day. But that is not true today because Stealth Group, the stock of the day, ticker code SGI, has not released any price sensitive information. However, I did mention a few days ago that I will do a standalone video on this company, and today has been quite boring on the ASX when it comes to announcements. Sorry, Pro Medicus. Yes, you did release another good announcement, but not many interesting announcements have been released today. Few and far between. And I thought, why not just do Stealth Group, or just feature Stealth Group as a stock of the day? So here we are. So in today's video, I'll just go briefly through what this company does. Then we'll have a look at their half-year results presentation. That's one of the reasons why I wanted to feature this company, because share price did pop up a fair bit as a surprise to me, because they did release it halfway through the day. And then we'll have a look at another announcement the company released after the half-year results that has me a little bit excited. Now, for full disclosure purposes, I am a shareholder of this company, and I'll talk about why I bought some shares in this company a few years ago. I think it's a few years ago, but it seems like it was a long time ago. And the share price has been a five bagger for me over that period of time. Okay, so what does this company do? I would define Stealth Group as a distribution company in industrial services and consumer technology. But I do know in their presentation, they do suggest that they are a distribution wholesaler and retailer, but I would say mostly a distribution company. Here are 5 of their subsidiaries: Heatley's, Safety, Industrial and Automotive; Force Technology, which is sort of consumer technology stuff. That's wholesale distributor and solutions provider in the large and growing mobile accessories market. C&L Tool Center, Industrial Supply Group, and United Tools. So it does seem like they are really into industrial services. In fact, before they acquired Force Technology within the last year, I would have considered this company to be industrial services distribution company, or maybe a distribution of industrial services. Okay, so let's move on. And by the way, distribution company is not my favorite type of business model, fairly low margins, and that is definitely true for Stealth Group. So I wouldn't classify this company as a high quality just because of low margins, but maybe a high quality company, or a budding high quality company over the next maybe 5 to 10 years, if they can maintain the momentum we are experiencing, or they are experiencing right now. Okay, on to their presentation. Here we go. Here it is. This is found on page 8. We are a distributor, wholesaler, and a retailer. Now, their consumer group selling, mobile phone accessories, not something I really am that enthused about. But their sort of background is industrial groups, so industrial services, that sort of thing, dealing with tools and whatnot. Okay, so let's just go on to their results. And I've already mentioned this company has fairly low margins, and that's definitely true. So $71.5 million of revenue in one half year, fair bit of revenue, but only $1.6 million of profit. But their margins have increased. That's the most important thing here. We have seen a little bit of an increase in margins. Now, it could take just a little shock to see those margins drop, and then even just a little bit of a decrease in revenue could see this company going from being profitable to loss-making. But the company is profitable, EBITDA $5 million, operating cash flow $2.8 million, and an earnings per share of 1.36 cents per share. And they also have a nice little cash balance of $10.4 million. Also, if you just focus on the increases there, this is probably a good reason why sometimes looking at the P/E ratio of company is not wise, because this company's profit increased 249% and earnings per share increased 202%. And this could happen for the next few years for this company, which means if you just focus on the P/E ratio, it will be taking you down absolutely the wrong path. I'm just warning you now. I would not look at the P/E ratio for this company for at least the next 5 years. Okay, so let's go to page... In fact, I was going to say page 11, but that is page 11, their results. So let's go to page 20. This is the sort of thing I really like to see in a presentation. In my opinion, capital allocation or capital management is the most important job the management of a company has to do if the company is producing cash flow or is profitable, because they have to know what to do with the money they're creating in the business. What do? Do they look for long-term growth solutions or possibilities? Give all that money back to the shareholder as dividends, share buybacks if they think the company is undervalued, or maybe research and development, or many things they could do. Maybe they just keep the money in the bank. Don't know. So they do talk about that on page 11 of their presentation. I won't go through this. And they do mention here, our capital management framework supports investment in our business and to deliver a satisfactory return to shareholders over the long term. So if they're really good capital allocators, that should translate to a really good return, a significant return to shareholders over the long term. So I'm very happy to see this in their presentation. If we just move on to page 22, whenever a company releases half-year results, I am going to gravitate towards any sort of trading update and outlook the company does release. Now, when a company releases full-year results, you don't usually see any sort of trading update. Now, the reason I do that is, sure, beating companies' expectations is good, but the numbers, the financial numbers, is backward-looking. Trading update and outlook is forward-looking. Well, not exactly, because the trading update is looking at the last, say, 6 months or since the end of the last financial period. But the outlook is looking into the future, and that is really important because the road this company might take, probably should take, is based largely on the outlook. Anyway, now the main thing I want to focus on here is margins. Now, one of my main gripes about these sort of companies are their low margins. And they do mention in the third bullet point that they are targeting profit margins to be between 1.5 and 3%. Now, moving forward for Stealth Group, I do think there's probably a really high likelihood they're going to increase their revenue over the next 5 years. The other thing I'd like to see this company do is increase their profit margins over the next 5 years as well. And they are expected to do that. And if we go to the next slide, they do have some goals. And one of the main reasons I took a position in Stealth Group is because they have some midterm to long-term goals. So this is for financial year 2028. And I'll be honest with you, if I didn't see this company have long-term goals, there's a really high chance I did not take a position, would not take a position in this company. So what are their goals for 2028? So sales, $300+ million, 8% EBITDA margins, and profit margins of 5%. So they are expecting the margins to increase over the next 3 years or so. Now, if you just look at those numbers, 300% annual sales, 5% profit margins, that means this company is expecting profit of $15 million in 2028. So a pretty good increase from what this company is experiencing right now. Now, I do believe the share price has gone on a really good run over the last few years because, or last year, to be honest with you, because of this. And these sort of goals are going to attract investors just like me. I'm way more attracted to a company if they have midterm or mid to long-term goals. And the reason behind that is simple. I think it's very, very wise to have goals in your life, mid, long, very long-term goals. And the reason it's good to have goals in your life is because you've got something to aim for. And if you've got something to aim for, everything becomes easier. You know what you need to focus on. And even if you have long-term goals, you can do small things in the very short term to make those long-term goals easier to reach. And I think this is definitely true for businesses. And in my opinion, every single company should have long-term goals, even though it might be termed midterm goals. And they should be actually saying this to their investors, because it's also very helpful for investors to know what a company's long-term goals are. So that is one of the reasons I was attracted to this company in the first place, because of their long-term goals. Okay, so that's all I really want to show you when it comes to this company's presentation. Now let's have a look at the most recent announcement that did get me a little bit excited. This was released on the 27th of February. Stealth secures exclusive distribution agreements for Cat Power Tools, Westco Power Tools, and Harden Tools for Australia and New Zealand. Now, probably the most exciting thing about this particular announcement is found in the 4th and 5th paragraph. This reinforces Stealth's strategic focus on high margin, exclusive product offerings and marks a significant milestone in its financial year 28 growth plan, further strengthening its position in the power and hand tool market. If Stealth meets its contracted arrangement targets by 2028 in sell-through, it is expected to exceed its previous guidance of $30 million in exclusive private label and own brand sales of the computer's total revenue target of $300 million. So in a way, this could be viewed as a slight, significant maybe upgrade to their financial year 28 target. And it wouldn't be surprising if this company does upgrade that target within the next year or so, particularly if this agreement is going better than expected. Okay, so let's have a look. They also mentioned expanding market reach and sales growth. But let's have a look at the chart for this company. Fairly spectacular chart. That's me taking a position well back in September of 2023. So now I've held this company for 18 months. Doesn't seem like long. And share price has almost, been a five-bagger for me. I've not thought, only once or twice have I thought about maybe taking some profits, but not really since August of last year. So over the past 6 months, the share price of this company has gone from 20 cents to almost 80. In fact, the share price did reach 80 today. And there's nothing really to complain about just by looking at this chart. It's a beautiful uptrend. Share price, probably the only thing to complain about would be the share price has really expanded, has really blown up over the past, we'll say month or so, and share price is well above the 25-day moving average. So there is a possibility we might see share price pull back. Not an absolute, just a possibility, just because the share price has gone up significantly in a fairly short period of time. Okay, that's all I have for the stock of the day, Stealth Group. To go to SGI. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.